Okay, so let us begin. I thank you for attending and welcome. We hope that after we are done with this training, you will be a lot closer to realizing your dreams of financial success than you think now. By registering for this webinar, you have put your trust in us. We know that you're busy. We fully understand and respect that. You must know that we will not waste your time. We know you have many choices for your investment, and we're honored that you've decided to spend your valuable time with us. Here's how we are different from other investment services. First, everything we show you in this webinar is time-proven in the U.S. financial market. If you've tried to learn how to trade yourself in the past, you've probably purchased courses with systems that worked in the short run or theory, but have never been applied consistently in the real world by real traders. This webinar, on the other hand, is a playbook for everyone who is seriously looking for a way to grow their account through short-term investments. We will show you a time-proven system. We will show you a strategy that is based on the market structure of the S&P 500, and therefore will be working as long as there is the New York Stock Exchange. The concepts we show you remain the same in bull markets, in bear markets, or sideways markets. The second difference to a lot of the stuff out there is that we don't just talk. We have been trading this strategy since 2013. There are a ton of people teaching trading, and the vast majority of them make money by teaching other people the strategies they learned about online. These strategies will not work in the long run. The name for these people is shovel sellers because, during the gold rush, the people who made the most money were the ones selling the shovels. Today's shovel sellers are selling you trading strategies without actually using any of the strategies themselves. The difference between us and most of our competitors is that we are trading our own capital with these strategies every day. The strategy we are going to teach you is the first strategy we are teaching to new traders in our firm, and this strategy remains a foundation for most traders who move on to more complex strategies. The third difference is that we do not want you to become a full-time trader. If you have tried trading yourself, you know how difficult it is to consistently make money not for a day or a week, but for years. For 99% of people, it is not possible to make money in trading. The 1% who make money are like elite athletes with elite athlete psychology. Therefore, we will show you how you can use the power of automation technology to execute trades from our trading desk to become consistently profitable and make your life very easy. You can set this all up in 15 minutes. More about the setup later. And the fourth difference is that we show you an option strategy that will not blow up your account. We do not use 100% margin to make a few percent profits. We only use a few percent per trade. We never sell naked options. We only trade risk-defined strategies. When we enter a trade, we know our maximum loss and maximum win. Before we jump into the strategy, we wanted to point out that we're doing these webinars for educational purposes only. Today's webinar does not contain any live positions. Everything will be hypothetical and therefore not subject to the market factors of liquidity, slippage, and commissions. If you are new to this kind of investment, you want to start paper trading, and when you start to invest live, please do so on a very limited basis relative to your net worth and net income, and do that for an extended period. And then on the learning curve of how options respond to different market conditions, you can increase your capital at stake slowly. You have to understand that to become a consistently profitable trader, you have to find a trading system that fits your personality, your cognitive strength, and your lifestyle. Now, for those of you who don't know about our firm, Advanced AutoTrades is a division of Harrington Trading. We are a remote proprietary trading desk. We have currently 77 traders working for us and trading our capital. We were founded by Mike Harrington, who has been actively trading the markets since 1987. These were the old days when there was no internet. You had to wait until the newspaper came out to see the prices of your stocks. You would literally have no idea what the market was doing or what your stocks were doing until the newspaper came out. Today, it is difficult to believe that this world existed, but it did. The strategy we are going to teach you is actually the favorite strategy of most traders in our firm. It's a great strategy to start with. And if you are ambitious about trading, you can build on it. Or you can just stick with this credit spread strategy all your life. The beauty is the simplicity of the strategy we are going to teach you. After this webinar, you will understand the complete credit spread strategy that yielded a 429% return in 2023 and an annual rate of return of 299% since 2013. We will show how you can verify these results yourself. We only use publicly available data here, not some made-up numbers. We will also show how you can combine this strategy with other non-correlated strategies to create an all-weather automated trading system. There is a simple way to do that, and we will discuss it at the end. The best thing is that traders of all levels can implement this system straight ahead. If you like to trade this system manually, then you will receive the trades via email, and you execute it yourself, or you can use automation technology to have the trades executed in your brokerage account. We will explain to you in detail how you can set this up. It does not matter where in the world you are located. US-based or not, you can implement this system from everywhere. If you do not have a brokerage account yet, we will show you how to find the right one and how to open one in less than 15 minutes. We show video tutorials on our website advancedautotrades.com/setup. If you have questions, our support team will be with you every step of the way. All this stuff should be easy and not time-consuming. At the conclusion of this webinar, we are pleased to present a special offer on our services exclusively available to webinar attendees. Therefore, we recommend you stay through the entire webinar from the beginning to the very end. You're uncovering the iceberg, and you need to understand the concepts in order. We're excited for you. Let's dive in and have some fun with this. So, let's get started. Everything in this trade is math. There is no hocus pocus. There's no special crossover or something like that. It's 100% math, and that's why this trade works. You can grab an Excel spreadsheet. You can create the same thing that I will show you. The spreadsheet is based on the open, high, low, and close of the SPY since 2012. The number would look identical on SPX. So there are about 3,500 potential days in there that we could be taking a sampling from. Now again, that's historical data. We can't tell you what's going to happen in the future, but historically, over more than 12 years, this is the information. I'm not using some magic to create some numbers. It's publicly available data and then copied into Excel. Anybody can do this. Just go to Yahoo Finance. Grab the daily open high low close of the SPY for as far back as you want. That is enough data for us to decide if this trade works or does not work. Put that information into a spreadsheet and measure what is today's open compared to 5 trading days close in the future. Is it higher or lower? End of formula. It's super simple. You can even have AI creating this. Grab a spreadsheet, take the open high, low close, put it in there, compare the opening of one day to close 5 days later, and you're going to come up with the same data. So let's look at this spreadsheet we created. This data is from the S&P 500 that goes back to 2012. This is tremendous information. This is pure empirical data. As you can see here, the win rate for a 7-day trade, which would be 5 trading days, is 1,866 winning to 1,172 losing trades. That is a win rate of 61.38%. You could go back 25 years on the S&P 500, and the win rate is still above 60%. This is based on the structure of the S&P 500. I don't care what you look at. Bear markets, bull markets, 2008, or COVID. Over time, the win rate normalizes to 6 wins out of 10 trades for a 7-day trade. So historically, there's an edge at the money. That's through every kind of move in the market up and down or sideways. Everything up until yesterday's close. 60% of the time, this trade historically was a winner. Now, if we have a 1-to-1 risk-reward and we win 6 out of 10 trades, mathematically, we can't lose money over time. We can lose money over a short period. We could have 10 weeks in a row that didn't work out. That can happen. It's rare. We did not find a time when that happened in the last 12 years. It's possible mathematically. But also, mathematically and historically, 6 out of 10 trades are winners. That is an edge. You can define that as an edge. So this trade works because of the positive drift of the S&P 500. It's basically a buy and hold strategy. If you look at any daily chart of the SPY and you look at it on any period, there is a positive drift to the upside. Buy and hold is why most strategies work. It isn't hocus pocus. You are benefiting from what you bought, and you're holding, and the trade makes money at some point in the future. But risk-reward is the key here. If we can keep our risk-reward 1-to-1, and we have a better than a 50% win-to-loss ratio, then there's no way we can lose money over time. We mathematically must make money. So, we're not going to adjust this. We're going to set it and forget it. If you want to trade this manually, you have got to have discipline. If you don't have the discipline, then just automate it. Let us do the work and go about your day. Size up as you see fit. If you entered 3 credit spreads, you're limiting yourself to $150 for that week on SPY. It's not going to blow up your account. You are only risking a few percent. But you have to learn that there are losing trades. There will be 4 out of 10. Be patient. There can be a losing month or two. But that's okay, because you're going to win more than you lose, and the power of compounding will take care of your account. And at the end of 1 year, that account is going to be bigger. If you are an advanced trader and you have opinions about the market and think you can improve the results, then you can do that. As an auto trader, you can just turn on or off your allocation before the market opens. So it's very simple. If you are new to trading, it's a great trade. Or if you're just looking for something as a baseline to build your account over time, it's an easy trade. Everyone can do this. Take a look at the live results on SPX since 2013 on AdvancedAutoTrades.com. Here we have the end of 2023. We show you the trade entry date and open price on SPX and the close price of the expiration day. If the close price is higher, we have a winning trade. If it's lower, we have a losing trade. In this example, we risked 5% per trade on a starting account balance of $100,000. Here you see the 1-to-1 risk to reward. We win around 5% or we lose around 5% on account balance. In the last row to the right, we show you the power of compounding our profits. Have a look at the account balance on October 30. We see an account of around $154,000. That's a 54% profit for 2023 after 10 months. Not bad, but far below our annual rate of return of 299%. Then look at the end of the year account balance. We see an account of around $529,000. That is a return of 429%. So why am I showing you this? What I want to emphasize here is to be patient. Some months, the market does not move. Maybe you are trading for 6 months and you're only 60% up or your account is only break even. So be patient. You do not want to miss a month like November and December in 2023. We do not know when these months are going to happen. Nobody knows. Therefore, pick your allocation wisely so you can stay relaxed during quiet months and take advantage of the few big months of the year. Historically, only 3 or 4 months of the year create the return for the whole year. So again, be patient. You only risk a few percent per trade to make these returns. So, here is the strategy. SPY is going to be the security and we're going to enter an at-the-money credit spread every first trading day of the week. That would be a Monday most of the time. Every once in a while, we have a holiday, and then it would be a Tuesday. But most weeks, it's going to be a Monday. The reason we're going to do an at-the-money credit spread and not an out-of-the-money credit spread is that you will find there is a better edge at the money. We can get a 1-to-1 risk-reward, and you're going to find out that risk to reward is a very important thing in trading. The risk to reward will be the first part of our edge. We use the 1-week expiration. So if we went in last Monday, we would have used next Monday's expiration. So it's Monday open to the following Monday's close. There are no adjustments in this trade. None. We're going to put it on and we're going to forget about it. That is the trade. It's going to be based on the opening price of the day. So on Monday, what is the opening price? It's the price that SPY is opening at on Monday. It's history. Once it's made, it doesn't fluctuate. That is the trigger. That is the whole reason for the trade. We're going to be looking for a 1-to-1 risk-reward. We're only going to get that at the money or close at the money. If we would do something that's out of the money, our risk-reward would significantly change. We would be risking, let's say 3 to make 1. That would increase our probability of a winning trade, but it decreases our net profit. And ultimately, we want to make as much money from these trades as we can. We are looking for the $1 wide credit spread, where we collect 45 cents. If we don't collect the entire 50 cents, that's going to be okay. We just want to get as close as possible to a 1-to-1 risk-reward. If your account size is such that a $50 trade for 1 week isn't worth your time, then do more than one contract on SPY. 3 contracts would risk 150 to make 150. If you want to risk much more, then move to SPX. If you do 10 contracts there, you risk 2,500 to make 2,500. Do whatever it is that fits your account size. We're just going to do the minimum on SPY for this presentation and let you size up according to what your parameters are for your account. So, this is what a typical credit spread looks like at the money. You may see here that I've collected 46 cents. That's about 50 cents. This is selling one and buying one. That's a credit spread. If I was doing this as a debit spread, then that would be on the call side. It's really easy stuff. You're looking for as much reward as you have risk. That's what you're looking for in this strategy. Now, we will show you the trade on the Thinkorswim platform. The left side is the call side, and the right side is the put side. I had 2 credit spreads on the right side, and on the left side, I had 1 debit spread. These are essentially the same trades. The debit spread I bought for 50 cents, hoping it'll go up to $1 and I'll close it for a $50 win. Or I lose the $50 I put into it. Same thing on the put side. I'm selling the credit spread for 50 cents, hoping it goes to 0, where I make $50 or it hits max loss, which is $1, but I keep the 50 cents in credit. I'm risking 50 to make 50 per contract. And here on the right, I had 2 credit spreads. We're going to talk about why I opened a debit spread on the call side in just a moment. There is a reason for that. But mostly, we're only going to sell credit spreads on the put side. So the preferred securities are SPY and SPX. The trade works on both in the same way. For the ones new to trading, SPX is the big brother of SPY. One contract on SPY is a $50 risk per trade for this strategy, and on SPX one contract would be $250 risk per trade. We do not recommend trading SPX with an account balance below $10,000 as one contract risks already 2.5% of your account per trade. Depending on the brokerage you use, SPX can produce lower trade commissions since most positions will expire and do not need to be closed, because SPX is cash settled at expiration. However, there is a trade-off. The compounding with a $10,000 account on SPX will not be as effective as on SPY. Both instruments are moving in the same way. Let's take SPY for this presentation. We're going to put this on Monday open, the first trading day of the week. If SPY opened at 460.30 cents on that day, that's history. That will not change anymore. It's always and forever going to be 460.30 cents for that day. We're selecting the strike prices where we get as close to a 1-to-1 risk to reward as possible. So we're selling 461 and we're buying 460. That's $1 wide. That's easy. Very easy to find. Then we're going to use next Monday's expiration. If it's trading at 45 cents, put in a 45-cent limit order. If you can get 50 cents, put in a 50-cent limit order. If you get 44 cents, fine. We can close a loser at 88 cents. But we do not want to settle for something like 40 cents. If we've to move this spread up one strike price, in other words, instead of the 461 and 460, we sell the 462-461 credit spread so that we can get closer to 50 cents, then we would do so. But we want to get that 1-to-1 risk reward. That's everything in this trade. In our service, SPY Weekly Trend, we will send out the order right after we know what the opening price is. I'd say within the first 5 minutes our order is in your email inbox, or with your brokerage to execute the trade in your account. We send out only limit orders to get all auto traders the same fills. These are the fills we publish on our website. There is enough time with this strategy to get everyone into the market. I would say 1 out of 10 times we do not get directly filled and we have to adjust the order. It's rare. So typically, we're getting filled at 1-to-1, and 90% of the time, we don't have to move the spread. If the market is really strong one day and just takes off from the open and just keeps going, that could be a day when we might move the spread up to get filled. This trade will have losing campaigns, approximately 4 out of every 10, but historically a 60% or better win-to-loss ratio. When you start trading this strategy, you do not know when a losing campaign is going to happen. Therefore, I urge everybody to scale up the allocation with time. If your desired risk per trade is $100, start with $50 per trade, and after you have a winning campaign and your account is 20% up, you increase your allocation to $100 per trade. We recommend to risk between 1 and a maximum of 5% per trade on your account balance. If you have a bigger account, you want to risk less. Smaller accounts can risk up to 5% per trade after scaling up from 2.5%. You don't need to add on to this trade. You can only trade on Mondays. For auto traders, just turn off your allocation before the market opens on any other day than Monday. Then your weekly risk can be as little as $50. But here's how you can add on to the trade. On Tuesday, if the opening price is higher than the previous day's opening price, we are going to put on another credit spread. We are going to use the same expiry. We are going to use next week Monday's expiration. That's not going to be a 7-day trade. It's going to be a 6-day trade. We do not add on a trade if the market isn't going in a bullish direction. If it is going in a bullish direction, we add on a second credit spread. Again, at the money, 1-to-1 risk reward. Same expiration as Monday. Very easy to do. On Wednesdays, same thing. If the opening price is greater than Tuesday, now we're not looking back to Monday anymore. We're looking back to Tuesday. If the market is still bullish, then we put another credit spread on. This is a 4-day trade. We're going to use next Monday's expiration. Now, we're going to have a third credit spread, but we have a third one because the trade is working. The market is going in the right direction for us. If Wednesday is lower than Tuesday, then we don't put it on. So let's assume that Tuesday's opening price is lower than Monday's opening, and Wednesday's open is lower than Tuesday's opening. We would still have the Monday trade on, but we wouldn't have a trade on from Tuesday or Wednesday. This week, the trade isn't working. We are staying smaller in a trade that's not working. So the trades that are working are bigger, and the trades that are not working stay smaller. Isn't that great? I also want to emphasize the power of compounding here. We highly recommend you compound your account. This is the only way this strategy got up to a return of 429% in 2023. What if we used more and more strikes and would need to use a strike that we are already short? Well, that's when we go to the call site. Remember, we had a call side position on. There it is. On the right side, we would have liked to use a strike that we are already short on that particular day. So we go over to the left side and we build this trade on the call side. We do it as a debit spread rather than a credit spread, but we still get the same 1-to-1 risk reward. You can see here we got pretty close to 50 cents at entry. Remember I told you we don't try to leg in? So we're buying a debit spread. We just put a limit order in at 55 cents. The same way we would do a limit order on the put side for 45 cents of credit. Now, we put that in for 55 cents of debit, and we always attach a good to cancel order at 98 cents. If the target fills on Friday, we are out of the trade. We're going to allow 2 cents as slippage. The maximum gain on this is $1. But I'm going to caution you a little bit about this trade on SPY. Be aware that the short call could give us trouble. We don't want to hold it in the money because we could be assigned shares. We want to just close the debit spread before 2 p.m. Eastern Time on expiration day. If you are an auto trader, you do not need to worry. We will close all trades on SPY for you on expiration day. If you trade manually, you will receive closing orders via email. So this is the optimization. The trades that are working should be quite often larger on this trade. We can get into 4 or 5 trades per week. That happens way more than the alternative. The trades that are not working, they're smaller. We get into 1. Sometimes we get into 2 or 3 trades. But that's it. But the trades that are working, we built up to 5 trades. So let's assume 2 contracts per day to make the math easy. We got on a $100 risk on Monday, a $100 risk on Tuesday, a $100 risk on Wednesday, and a $100 risk on Thursday. We didn't get in on Friday because it was a lower open. We've got $400 of risk and $400 of potential gain. That trade expires on Monday. We got maximal gain. We made $400. The converse. On Monday, we got in, but on Tuesday, Wednesday, and Thursday, the market was going down, and then on Friday, it finally started to go up. Now we get in on Friday. We have 2 trades. It continues to go down on Monday. We take a maximum loss. We've lost on 2 trades, not 4 or 5 trades. So our losing trades remain small. We have had times where we've gotten all 5 trades on, and then on Monday, we have a bad day and we lost on all 5 of them. We can tell you that's only happened twice in 15 years of research. It's only happened to us once and in 4 years of trading. So it's a rarity that it happens. So you're bigger in your setups that are working and you're smaller in your trade setups that are not working. Isn't that fascinating? There are 2 potential exits. We just let the spreads expire on SPX, but on SPY we put a good to cancel limit order out at 2 cents for credit spreads. And if it's a debit spread, we put a good to cancel limit order in at 98 cents. We will always add these orders at entry, and we take the 2 cents slippage. The credit spread we sold for 50 cents, we put a limit order in at 2 cents. Again, due to exercise risk on SPY, we don't want to hold any positions to expiration. On SPX, we cannot get assigned because SPX is cash settled at expiration. You can trade SPX if your account size is above $10,000. If it's below $10,000, stick to SPY and grow your account until you can trade SPX. The results for this strategy are identical on both instruments. Now, you have to decide if you want to trade this trade manually or if you want to automate it. If you want to manually trade it and you have signed up already, you will receive the position via email at the market open at 9:30 a.m. Eastern Time. You can put in the trade using interactive brokers. You can use thinkorswim. You can use TradeStation. Whatever brokerage works for you, go ahead and use it. We don't need a day trading account. We're not going to get out of this trade in one day. We don't need to be able to write naked putts. We don't need anything special. If we can open spreads, that's it. For SPY, you need a margin account. But because SPX is cash settled, it can be traded in a cash account. If you want to save yourself the time to look at the market open every day, then just automate this strategy. You would need a brokerage that allows automation of this strategy. If you do not have a brokerage account yet, we recommend you open an account with AutoShares. AutoShares accepts U.S. and also non-U.S. residents. This strategy is listed with them as SPY Weekly Trend or SPX Weekly Trend. After your account opening, you can choose what you want to trade. The strategy will be then executed automatically in your AutoShares brokerage account. If you are a U.S. resident and you have already a brokerage account with Interactive Brokers or Tradier, then you can automate our strategies through Global Auto Trading. Just open an account on the global-autotrading.com website and connect Global Auto Trading with your Interactive Brokers or Tradier account. Again, we will send you more information via email after this webinar. Please check your email inbox, or you can also just get in touch with our team. We are here to support you. You made it to the end of this webinar. Here is your promised offer from the beginning. What we like to offer you is an all-weather automated trading system with 3 time-proven strategies for one price. If you like to take this offer, you get a subscription to our flagship service Weekly Trend that we explained in detail in this webinar. Further, you get access to our premium collection strategy called Weekly Premium. This is an investment service that sells 1 out of the money credit spread per week on SPX when we see a weakness in the weekly trend. This service can make up for possible losses of the weekly trend service in sideways and bear markets. We usually hold our positions only 2 to 3 days to exit quickly with a 4 to 5% profit on allocation. This strategy has a high probability of above 80% and is a service for more advanced traders. And the third service we offer is called Monthly Trend. This service is our most conservative service with only 1 trade per month with a duration of 30 days. Monthly trend makes profits in quiet months when the weekly trend service is mostly flat. Here we have a winning rate of more than 70% and have never had more than 3 losing trades in a row since 2013. For more detailed information on both services, please have a look at our website. On top, we will give you our weekly Market Outlook newsletter with last week's market recap, critical market headlines, technical analysis of important charts, upcoming news and earnings events, and technical levels to look out for. Together, these 4 services have a monthly value of around $500 if you subscribe to them individually through our website. But what we offer you today is 3 investment services plus our weekly Market Outlook newsletter for one price, and you will have a 14-day trial to try out all services. If you do not have a brokerage account yet, your trial will only start with your first trade, and we will give you all the support to open an account quickly with AutoShares. This is the end of the webinar. Thank you very much for staying till the end. Regarding your special offer, our team will get in touch with you now. Please check your email inbox. I know this was a lot of information. Therefore, you will also get access to a recording of this webinar. Our team will gladly assist you if you have questions or need further clarification. Thank you, and have a great day.